I'm subbing for myself today. It's weird. I said, what's Kavuda doing? I'll do his show. All right. We got the Wall Street Journal's and Borrowed Time, a phenomenal book, co-author James Freeman. We've got market watcher Stephen Guilfoyle, call him the Sarge. You do salute him because he's that good. And Gerri Willis, one of the finest people on the planet, period. All right. So, Gerri, I want to get your take on this obsession with trade wars that just build and build and build. I'm not here to judge their virtue. I am here to say, where does it end? Because it always starts with, let's say, steel, aluminum in this latest case with Turkey, and now it's extended to, as I say, booze. So where are we?
Now it's serious?
Yes.
Is that what you're
That's
saying?
what makes it very serious in my eyes.
Well, I understand what you're saying, and I relate to that as well. But look, the reality for tariffs that we're putting on Turkey matters not to us what they do in retaliation. They are 1% of the world's GDP. Who cares? The people who really get hurt in this are Turkish consumers, people who live in that country, right? But overall, these wars are having impacts across the planet, and you saw the numbers coming out from China, disappointing numbers across the board there. I think that, in part, is what's going on, why it's important. Right. And, yeah, look, trade wars can be a very big negative. And
I do want to stress, and Sarge, you can help me with this notion that, and I think Gerri stipulated it very well, a lot of this really is China-driven, too. The L10 tumult here and the fact that one of their biggest names could be under some duress. I know Charles Payne and Stuart Varney were getting into this, but that could have longer and far more sweeping ramifications. But what do you think of the overall macro picture here?
Well, the macro picture is almost outstanding here in the U.S. You saw retail sales. You even saw department store sales within the retail sales, which were excellent.
That was
for
so
July.
weird, yeah.
And that although you still saw
better than online sales.
Exactly, but you still saw the big sell-off in the Macy's, in the Kohl's, in the Walmarts, along all of them.
And by the way, with Home Depot, even when they beat, what's
you know what?
about?
Home Depot is fine, I think, but you went to China. Gerri went to China. This is the problem, okay? We're winning a trade war. That's a problem because now the Chinese economy is going off a cliff. And that's the engine for global growth.
Because of this trade back.
That's why you see Caterpillar suffering this morning. That's why you see 3M suffering this morning. The big industrial names that depend on growth are the ones that are going to suffer the most right now. That's why you're seeing the semiconductors as well. They're all exposed to Chinese revenue. They're all suffering this morning after having a nice run yesterday.
Yeah. When you look at this, James, and I understand quite readily that Turkey is very, very different. I know you have written about Citigroup and others that were exposed to crises in the past from Argentina and what have you. I'm not even saying it's in that category or league, but I am aware of banks that have exposure, and I think even Goldman Sachs this week saying it is watching out for those who are exposed to entities who are exposed, which is a weird way of saying everyone is potentially exposed. But what do you think?
Yeah, and I'm not sure you're that far off comparing this to Argentina 2001. I think what has some investors worried is that they don't see good policy anytime soon in Turkey. And I don't think they have intractable, unmanageable problems, but just a lot of bad decisions have gotten them to this point. And but as far as contagion, that was the big word 10 years ago during the financial crisis. I wouldn't worry too much about that. And this may sound kind of funny, but one emerging markets investor I was talking to today was saying that Europe's problems are so big that some Turkey exposure for some of their banks relatively is not that big a deal compared to their other long-term structural problems.
I think you're right in the big picture of things here. Sarge, it's interesting, though, when you look at and go back in history, these become obsessive moments, especially when they occur in the summer with we remember the bot crisis in Thailand in 97, the ruble crisis in 98, the peso crisis a decade before that in the mid-90s. I'm not saying they're short-lived, but usually a month or so later, things have returned.
Well, you can wait them out.
Yeah. So what do you think of this one? Wait it out?
What we're having right now, what we're suffering from in the marketplace is a currency shock. All right? It's due to Turkey. It's due to the failure so far of Brexit negotiations. Those are pushing certain currencies lower. Emerging market, the euro is for Turkey and the British pound, all going the wrong way. The only one that's moving with us is the yen. All right? So we have this problem with the currency markets. How you know it's not systemic is you watch gold futures, all right? Gold futures are behaving like a commodity. They're not behaving like a safe haven. When they start moving with the bonds, then we have an issue.
All right, and they're not doing that.
Not at all. They're headed south just like every other commodity on the dollar strength.
But that's been kind of the story with gold for years, right? I mean, what's going on there?
Right.
Yeah.
So there's no say. What we need the president to do is to come out and talk the dollar down like he's done a couple times. That would be helpful right now.
But his tough stance, Gerri, whether you like the guy or dislike the guy, he is getting his way on these issues and forcing, concessions, or that's what he hopes, and that's the picture here. We have climbed this wall of worry with stocks prior, today, and recent days notwithstanding. But obviously, as Sarge pointed out at the outset here, it doesn't take long before it could mushroom. So what do you think?
Well, it absolutely could mushroom. Do you know that I'm sure you know that we're on the threshold of having the longest running bull market ever.
Next Wednesday. What are you wearing that day? Because
probably red. What will you have on? I don't want to clash.
I thought green. Not a thinning color, but I would. Go ahead. All right.
You always look.
Thank you very much.
But I really believe that, look, there's so many positive fundamentals for this country. You see consumers on fire, these retail sales numbers. Who's doing it? It's the consumers. The job market doing very well indeed. The only overhang here really is debt, right? We're closing in on, I believe, $13 trillion worth of debt for consumers. That's a big, scary number out there. We need the consumers doing well. But ultimately, this China in particular could rebound negatively for this country because.
What if China were to really tank? That what we've seen here at 10 cent is a sign of things to come. Then what? And we're merrily going along because we have the earnings, we have the economic numbers, we're putting up the good data. Then what?
We're certainly less exposed to trade than a lot of other countries. If I could add one more bit of great news on the U.S. economy, productivity. The one sort of nit in this wonderful picture has been wages not rising as much as we'd like. Rising productivity suggests more wage increases to come.
And they suggest, not that, we've been talking about the wage side. I don't know how you feel on this, but 2.8%, 2.9%. It's not. I can remember when we were in the high single digits, but this is kind of like the low single digits. But is that so bad if you're getting improved productivity with it?
It's not so bad. The productivity number is really just catching up to some poor numbers from the past. Mm-hmm. But the wage number would be a problem if not for the tax cuts. Now, if you live in a red state, you've seen a dramatic increase in your disposable income.
Right.
The household debt that Gerri just managed is only about 86% of disposable income at this point. 10 years ago, it was 116%. This is the lowest number for debt versus income for the family since 2002.
Debt versus income, but if you look at overall debt, we're back to the levels of the highs, and that's what's concerning for so many folks.
So, yeah, if the fiscal picture forces a backstep in our economy, then you're right. Then we have an issue.